Hello and welcome to our weekly overview of the global markets section 2. So without further ado, let's begin with the Swiss market. The near-term focus here remains lower in wave 4. We look for one more drop into the 11,400 area of the prior fourth wave low to complete wave 4 and set the stage for another rally in wave 5 of 3, perhaps toward 14 to 48, where intermediate wave 3 would achieve a typical 1.618 multiple of wave 1. Next up is Spain. The 13-year downward sloping trendline near 9,000 remains strong short-term resistance. However, we favor this trendline breaking into the new year as wave 4 likely bottom out near 58.25, and prices are currently tracing out an initial 5 wave rally for primary wave 1. We look for support near the prior lows at 81.04 and 76.98. Ideally, wave 1 would top out near the 78.6% retracement of cycle wave 4 near 13,755. Next on our list is Hong Kong. As we discussed previously, we look for Hong Kong and the Hang Seng Index to complete a long-term bullish triangle for wave 4. And recently we got what appears to be an initial impulsive rally followed by a corrective pullback. So a key level to watch near term is 26 to 21. A solid break above this level begins to suggest that wave 4 is complete and cycle wave 5 is in its very, very early stages. Overall, to establish that cycle wave 5 is complete, we need to see a decisive break above the BD trend line near 30,000. So this will be our focus in 2022. Next up is Australia. Here we remain bullish in wave 5 as long as support near 79 stays intact. If support is overcome, however, we will have to assume that primary wave 4 is still in progress, tracing out either a larger flat or triangle. However, this is not our preferred scenario. Just to note, our target for wave 5 is 116. And now let's take a look at India. Prices here remain locked between 18,594 and 16,445. However, we favor this range breaking to the upside as prices are likely tracing out intermediate wave 3. A strong upside target for 2022 is the 1.618 multiple of wave 1 at 23,615. So to recap, this is just a pause within a larger bull market. Next up is Tokyo. Prices here remain contained in a corrective price channel that should ultimately be broken to the upside, with 1849 strong near-term support. And as we can see, prices have started to recover from the recent decline, so A break above the upper trend line would be an initial bullish sign that the larger uptrend in wave 3 has resumed. The next upside hurdle to note is the upper trend line of the base channel near 2130. Once overcome, prices in wave 3 should gain upside traction as we look for wave 3 to ultimately reach 2821, the 1.618 multiple of wave 1. And now let's focus on Taiwan. Here we remain bullish in wave 5 of 3 with the Fibonacci cluster into the 22,677 to 23,394 area, a strong upside target for 2022. Although short term is not quite clear what exactly is unfolding, we look for support near 17,198. If this level gives way, we will then look for support near 16,169, although this is not our preferred trajectory. And last but not least is South Korea. Prices here have started to recover from the bottom of the corrective channel. So, near term, we watch closely the central line of the channel near 2828. A close above this trend line would begin to suggest that wave 2 is complete, which is an almost exact 38.2% retracement of wave 1. A solid break above the upper trend line of the corrective channel will then be strong evidence that wave 3 up is in its early stages. Prices in wave 3 will likely gain upside traction once the wave 1 high near 3321 is overcome. This concludes our weekly overview of the second section of the global markets. Have a nice weekend, and I'll see you in the next one.